So I wanted, Joe, I thought we'd start, Joe, with your time actually at PayPal and how, you obviously still close to a lot of those guys. What's interesting to me is that after PayPal sells, they go out, pursue different opportunities, different companies, different sectors, and with a lot of success. But then gradually, you see them moving back to FinTech. So Max Lipton with a firm, and Keith Raboy, real estate FinTech, and your own investments. Why do you, so maybe start there, Joe. Why do you think, when you think about the PayPal crew, they come back to FinTech? What about the sector excites them?
Thanks,
and you?
Josh. Thanks, Josh. I see a lot of friends here in the audience. Well, I was only at PayPal briefly when I was pretty young as an intern, but I think the core that kind of brought that group together was you had a lot of contrarian thinkers, and you had a lot of people who like solving problems, like fixing things that are broken. And you're asking, why do that through finance? And really, if you look at it, finance is kind of like this really interesting meta industry that impacts everything else. I think a lot of people, when they want to solve problems in the world, the first thing you think is, let's go into healthcare and let's go into education. Those are very important things that if you fix them, a lot of things on top of them work, obviously. I think finance has that same kind of meta impact, where if you make finance work better, you make everything else work better too. So if you want to solve a problem in real estate, like Keith Raboy was doing, if you want to solve a problem and how people can trust each other, how they get things done, how they transact together, like Max is working on now, those are very different problems, but you have to use finance to solve both of them. So that's why I think it's really important to innovate in finance.
I want to dig into a couple of ways that you're approaching it. So Adipar, co-founder, chairman, this platform where wealth managers, financial advisors, they gather data from different accounts in one central place, or at least one part of Adipar this applies to, and then they can quickly sort and analyze that data. How did you come up with the concept for Adipar?
Well, gosh, it's a little bit of a longer story, but I guess the basic idea we approach the world with is that in Silicon Valley is that there's been these waves of companies, and there is a wave about 30, 40, 50 years ago of the very first enterprise software that was put in. And if most industries you look at now are still being run by that old enterprise software. And one of the big things in the last 10 years is, for the first time, we're going back, thanks to the cloud, thanks to big data, thanks to various other tools, and we're replacing this infrastructure that runs these industries. And to me, the area Adipar is working in was one of the most important places to fix the financial infrastructure. If you can fix the infrastructure on top of which all of the world's assets run, and on top of which private wealth managers work, that's infrastructure that the rest of finance has to tie into. You can think of finance, at least a lot of parts of finance are like offering products and services to money, right, in terms of the wealth side. So that's a really important side in which to have a really good modern platform. And so that's kind of maybe that 50,000 foot view. The other view is we knew a lot of family offices, we knew a lot of RIAs. I was building my own family office a decade ago, and I was just shocked by how poor the technology was in the space. We realized there was a lot to fix.
And so if you're using Adipar, you're a wealth manager, you're a financial advisor, what's the real value add there, Joe? Is it speed, or?
It's a system they're using to run their whole business. So it's a lot of things. Actually, we did a study that came out last week. I don't think we've published it yet. But the people using Adipar in the industry versus people not using Adipar in the industry are growing about 30% faster on average, which is pretty cool. So it's actually it's the RIAs that want to grow faster, basically, and need to be able to be more efficient, I guess, or thinking, how can we be more efficient? How can we get things done that are accurate without having to check them a ton of times? How can we provide customizable experiences for our clients? It's basically a better system and better tool, which means 20 different things, of course, in the industry. It's a lot of hard data problems, a lot of hard interface problems.
And are most of the financial advisors on there, do you have a sense? I mean, is it ultra high net worth, or what part of the community?
I think it's both high net worth and ultra high net worth. So there's different parts of the business. There's the family offices, there's the RIAs, and there's a lot of medium-sized banks. There's a bunch of larger banks now as well.
And we talked about the benefit to the financial advisor in Adipar, but how does it actually benefit the customer, the client?
Well, I mean, I think the customer wants to be able to ask a question, be able to see all their stuff in one place, and be able to get quick, dynamic responses that are personalized to them. And they want the advisor to have all the informational awareness. Like in some cases with the big banks, you'd have like 8 or 9 reports otherwise, and maybe you'll have assets in a lot of different places. You want your advisor to be able to see everything you're doing holistically in one place. Being able to integrate with all the different types of banks and systems is something that's one of the reasons Morgan Stanley needed it, among others, is that they have these really great high-end wealth advisors, but the person working with high-end wealth advisor might be working with 5 other banks as well. How can you see everything in one place and serve them coherently?
And what's interesting too is I hear you talking about Adipar. you're talking about data collection and data mining and analytics. I mean, are there similarities to, obviously Palantir, which you co-founded too, or maybe the question is, what from Palantir did you learn and maybe bring to Adipar?
Yeah, well, definitely, number one in Silicon Valley, we always come back to is the technology culture, and the data integration problems are extraordinarily difficult. We were honestly a bit arrogant approaching it after having done Palantir. We'd say, we've run all these things for the CIA and global intelligence agencies and NSA and DoD and solved all these really hard problems. So how hard can it be to integrate custodial data? And we mapped it out, and there's 7,000 custodians, and we said, well, this is going to be easy for us. And I remember, I won't say the name of it, but there's a couple of them everyone in here knows. They're very famous custodians. We hooked up to them, and we got the data, and it was wrong. And we got it again, and it was wrong. Like, we must be doing something wrong. And then we found out from them, no, it's normal. There's usually 1 or 2 mistakes whenever we send you these things. We said, oh my God, this is like such a mess, and it's way harder than we realized. And so I had to teach the engineers like what reconciliation is, because if you think in finance, obviously reconciliation is a thing you do, it's normal. But the reason reconciliation exists is because you're acknowledging there's always going to be things that are wrong that you have to go back in and fix every morning. That's a kind of a weird concept to an engineer who's thinking in this way that just like going to hook it up and it's going to work. No, you're going to hook it up and then you're going to fix it every day. So it turns out it's a very hard problem to solve. And there's a lot of things. Adipar is now 10 years old and now is a very large company. But we had to take a lot of what we did in Palantir and even more in some cases to get it right.
And the connection there, I mean, is kind of deep. I mean, isn't Adipar's CEO former Palantir guy, right?
Yeah, Eric helped me build Palantir Finance and very passionate about the financial industry.
And you mentioned, I mean, Palantir is obviously, so very well known for the work they do with the U.S. government, the military.
We got a big contract this week, you see that?
I heard about that headline, Joe.
Yeah.
And special forces, but is there, when you think of Palantir long-term, is there a role for that company in financial services beyond what it's done already? How do you think about that?
Well, Palantir is definitely doing a lot in global finance, and I helped build that side after the defense side. But to be honest, I think Palantir is probably not as passionate about some of the things in finance as Eric and I are, and that's why we were running it.
Why do you think that is, Joe? I mean, that.
Maybe I think it's a very different culture. I think the people in Palo Alto and the engineering teams, and I think there's probably even a bigger culture gap there than there is in healthcare and energy. I'm not exactly sure why, but I think they're more focused on the mission in the government sense, and they are doing some good things in finance. But I know they're much more focused on a lot of other industries around the world.
I also want to talk about broadly another area you're interested in, which is the information infrastructure running finance. Talk about that and your interest in that sector.
Yeah, well, I think in general, those are where a lot of the really interesting problems are, going back to that initial thesis of what is the information infrastructure that's powering, mortgage-backed securities. And see, Nima's in the audience here. He's doing really well with Glenn and running things for a lot of the big banks in terms of how they issue mortgages and how they work with that. I think like the title insurance industry is this very broken thing that Qualia is dominating. Even like the insurance companies want to launch things. There's basically, Guidewire's in that space. There's basically no real modern SaaS platform companies in that space. Socotra and others are doing really good things there now. So I think there's just these big gaps in terms of running the infrastructure here. And a lot of banks do a great job hiring thousands of engineers, doing things themselves, but a lot of these probably shouldn't be being done one-off by the banks. They should be being done by utilities that the industry kind of all partners with together. And so I think those are very, very powerful and valuable things to get right, because when you can own a platform everyone's working with, there's a lot you can do from there.
And so, given your interest in the area, I think you mentioned a couple, but let's dig down into a couple of the startups that you think are focused and that you're excited about in there.
Well, diving further in with something like Blend here, I think it's a really valuable platform to have. Not only are you taking a bank process that's very expensive and making it much cheaper for the bank. This is the cost center you're taking away a lot of, but then you're basically getting network information, network data about the space that could be harnessed and used for lots of different things. So I think that's a very, very powerful platform, and you can start layering lots of things on top of that as well. And I think similarly, like insurance companies right now, it's like they don't actually capture and share data and learn about things very well. It's a very incoherent industry in terms of how they approach their data. If you have a modern SaaS platform like Socotra that lots of these big companies are all starting to launch on, suddenly we know better than anyone else what's going on, and we can help our customers do a better job with it and price things better and work with customers better. So I think just these industries in general, by fixing their infrastructure, are working a lot better.
I also want to touch about certain policy and how you think FinTech can impact policy. I know housing is a subject of great interest and passion to you. Walk me through that, Joe, and how you think FinTech.
Sure. Yeah, I mentioned I really liked some of your recent comments on housing. Well, there's a lot of these policy issues that we're getting involved in now in the Bay Area, but I think housing is probably the biggest one for you who are not familiar. It's the most expensive city in general in the U.S. And the ratio of affordability is completely off, where we have everyone coming here, but we're not building, and all the people running the city don't really understand economics very well. So
and how do you and when you meet with those people who don't understand economics, Joe, what do you say?
Well, I mean, the question. So one thing we're trying to do is you go around them, you go to the state level, and so one of the laws we passed last year with a bunch of support from my friends is something that lets you build, for example, accessory dwelling units without having to get local permission. You could just build it on your property by right. And of course, this becomes a FinTech issue now, because how do you enable hundreds of thousands of people to build these maybe for free in different ways, right, using FinTech? So there's all sorts of different ways you can use FinTech to enable, creating more housing supply and actually solving the real issues that are hurting people here in our society the most.
Are you confident that's going to happen?
Well, I'm going to work on it, so we're going to see what we can do.
How much, I mean, when you talk to, I'm just interested, when you talk to lawmakers, how receptive do they seem to be when you?
You know, it's really interesting. So I actually had, there's a former economics professor who works for me, was in Sacramento last week with this big lobbying day. Unfortunately, it was the same day the agriculture people were there, so there's kind of big competition with people in big hats and livestock on the Capitol grounds. But we got in and we talked to a bunch of the senators and congressmen, and a lot of them are very interested, but they're very afraid of their constituents. They say, like, yeah, I agree with you, this is right, I want to help. You have to convince these people, because there's a very powerful NIMBY force here where people all have their wealth in their homes, and they know it's not fair. Their kids can't afford to live here. Other people can't afford to live here. Other people are commuting for 2 hours each way. So they agree with that, but then they say, well, I'm really scared I'm going to get voted out of office if I go against the NIMBYs. How can you help push me in public to do this in a way where I get to see this is actually what people want? So it's definitely an issue we're all working on.
Sticking with that, I want to touch on another startup that you're investing in, which is interesting, which is Neighborly. And that's a marketplace that connects cities with investors when you're looking to finance civic projects, right? So you're thinking schools and parks.
Yep.
What's interesting is not just traditional institutions. Like if you look in a city looking for funds, you buy bonds on Neighborly. How'd you get interested in that startup?
Well, that's another example of an area that's really needs to be fixed, frankly. If you look at municipal finance, it's kind of dominated by 4 or 5 big players. There's a bit of a cartel. There's a lot more cost there than there should be. It's being captured. If you can capture that cost and give it back, then instead of that cost going to middlemen, it's going to go to schools and libraries and parks and local funding, right? So I think it's pretty obvious it's something that needs to be done better. The question is how to break in. I think Neighborly is a great company. I think they kind of bit their teeth on the ground of the cartel and got knocked out by the cartel a little bit, and they've had trouble going that way. I think one thing they're focusing on now that's pretty clever is there's these new opportunity zone legislation. And so what they're trying to do now is they're enabling a lot of towns to put in fiber, put in different kinds of new telecom, and using opportunity zones to raise money for that, which I think is very clever. And
what's the business model there, Joe? How does Neighborly make its money?
Well, it needs to be a coordinator between the town and the contractor and the ISPs and raise the money and push these things forward that wouldn't happen otherwise. So I think there's a lot of ways in which you can kind of work with municipal finance people in the town to organize things that aren't going to happen otherwise. So it's a clever company.
And why? I guess one question: why is that an attractive investment, Joe? Like, what returns could an investor expect there?
Well, I mean, in general, these are actually very safe projects to own infrastructure. In this case, it's actual infrastructure. It's not financial infrastructure, right. But they're building the way to help create that infrastructure. And so in a lot of cases, you get 12, 13, 14% returns on these types of things relatively safely. And if you take away you guys probably know opportunity zones is legislation that was passed a year and a half ago. You can roll capital gains into these things. So effectively, you're getting all of those gains tax-free over a decade on the money you roll in from capital gains. That becomes very, very compelling, I think, to a lot of wealth managers. In fact, things like that may end up being offered through places like Adipar, where we have, $1.4 trillion on Adipar. Why not start showing them things like that? So,
it's $1.4 trillion.
Yeah, that's true.
That's $1.4 trillion. That's a 10-year-old.
Only 360 of that is in alternatives, though, of course, because you can kind of look at it like a lot of that is in other types of assets. So the alternatives part's the interesting part to me.
Let me ask you, Joe, we talked a lot in the few minutes we have left here, we talked a lot about some of the startups that excite you, the trends that excite you. Are there FinTech trends that don't excite you?
Well, I think...
There's probably too many. Give me one that doesn't.
Yeah, sure. Listen, this will probably annoy a lot of people because I think there's a lot of smart people working on crypto. I personally have not made any equity bets in the crypto space. I did buy a couple currencies early on. I do think the blockchain in general is for reasons everyone's already discussed, very important. I guess I'm much more excited about using blockchain at a successful company that's already solving a need and serving an important process that then uses blockchain to organize things between entities. I think that's very clever. I think that the vast majority of crypto companies I've seen, and there were a lot of frankly, opportunists getting involved in that space and with plans that were quite questionable over the last 3 years. Most of them.
Did any of them, by the way, pitch you? And when you were in a pitch meeting, you said this just doesn't look this right. Did you have a lot of crypto pitches?
We were pretty direct with these things. Like, here's why I think this doesn't make sense. And you get people who are very passionate about what they're doing and get very annoyed. So sometimes my partners keep me out of meetings when they know I'm just going to tell them that they're wrong. But in general, yes, we see a lot of pitches, a lot of things we saw. Some of them were really smart, but we said this doesn't need to be a crypto company. You're calling something a crypto company. That's something else. Why don't you just build the actual company? And why the big focus on crypto? It seems like you're just trying to raise money from stupid people. So, sorry. It's not supposed to say that.
The fact that, all right, so you haven't been interested in crypto, but what about, I mean, do you see any opportunities now when you look at the crypto carnage?
I think taking some of these and harnessing them and using them, like for example, sorry, because Nima's in the audience again, for Blend, like I think Blend can actually use blockchain in some very interesting ways to coordinate between banks and Fannie and Freddie and in terms of how data flows, in terms of how the information in general is shared in that space and understood. Like, it probably makes sense to have some version of a blockchain that would save everyone a lot of time. And so there's utilities like that if you're already doing very well in helping run a space, yes, why not add in a blockchain utility? I think there will be a few of those that succeed, but I think it's much more like something big companies that are already successful should be using than people who are trying to start entirely new companies necessarily should be doing.
When you are getting, I'm just interested, you brought up pitch meetings. When you are getting pitched, Joe, what are you looking for from a startup?
Well, this is kind of a weird question on the nature of knowledge, right? And so, like how do you know certain things? Like number one,
I wouldn't want that to be, if I was pitching you, I wouldn't want someone to ask me what the nature of knowledge is.
Well, but what I mean is, how do you know who the talented engineers are? Because the number one thing that's really hard to do is to build a really top tech culture. And this is the thing you have to come back to if you want to be a top tech investor. There's no such thing, maybe Twitter's the exception. There's usually no such thing as like a company that just blows up into $1 billion plus company that doesn't have an A+ tech team in Silicon Valley. I've never seen it. Other than that one, maybe one other. But the 99% of the time, you have to be attracting the very, very best engineers in the world. So that's the first thing we're looking for. Because if you're not able to do that, then I don't care how smart your idea is. It might be an okay company. It's not going to be one of the great companies. And so first of all, we're mapping out talent. We're spending time, figuring out who's coming out of the top 15 or 20 universities that we look at. We're spending time with other top tech companies. We're spending time with the founders in our network, because the founders in Silicon Valley tend to know where their top talent's going, where their smartest friends are going. So you have to have these networks that you are plugged into, and you're figuring out where the talent's moving around. So I'd say number one is that micro side of talent. Number two, for me, is you're solving a problem that actually matters. I don't think you can make a lot of money by a trick. I think you can only make a lot of money by actually solving a need, by actually building something that long term, this is why this needs to exist in the economy. This is why it's a better way of doing things. This is what we're doing that is not already there. So for us, we tend to go very deep on industries and try to understand what are the actual needs, where are the gaps. And fortunately for everyone, the world has lots of gaps everywhere. There's lots of things that don't work the way they should, right? But you have to really understand that. And so the other thing we try to do is then, like, okay, you've gone deep on this industry. Like, what advisors do you have in the industry? Who have you met in the industry? Who have you talked to? Who have you convinced to come onto your side? Are you someone who's good at building a cause? Because a startup's like a cause, right? A startup's like, we're going to do this, we're going to fix it. So if you're a good entrepreneur, that means you're good at building that cause. And it's our job to help with that as well. It's our job to know these people, to connect you if we believe in it. But you also have to be good at that yourself too. And it's the same thing with the tech. It's our job to help you with the technology culture, but you have to already be really good at that, and then we can help you more. We can't just do it ourselves for you. That's too hard. We're not building your company.
And that's what you're looking for, Joe. Maybe I'll end here with the time. When they pitch you, what don't you want to see in that pitch?
Probably the number one mistake people make who don't come from our culture in Silicon Valley is they talk to you a lot about their patents. It tends to be a really, really negative indicator.
Why is that?
Well, it turns out that's not really how value is created in the world. Yeah. Like, none of these companies in Silicon Valley were valuable because they got a patent on something. It's kind of like a misguided view of how the world works. It's like a wrong conceptual model that people have from the outside, where they think there must be an inventor and they must patent something, and then they build a big company based on their patent. And that's actually not how any of these things get built. It's more about the talent and the execution. And usually if they're focused on the patent, it's like a really good sign that they're not focused on all these other things you have to be doing. And eventually when you get to be a big company, you do need to patent things, and you do need to deal with that stuff. But especially in anything having to do with software and information, patents are usually not a part of the value creation, and not even really part of the story when they're bigger either.
Got it. Well, now you all know how to pitch Joe Lonsdale. So, Joe, thank you for your time. Appreciate it.
Thank you, Josh.
Thank you.